global economy continued to be devastated by the COVID-19 outbreak. It brought about a global recession and forced the financial industry to face a challenging and hard task in trying to revive the economy. The global financial system's integrity has been compromised. Banking regulators must overcome a fresh set of obstacles and implement unprecedented regulatory measures to lessen the outbreak's consequences. The negative effects of the COVID-19 pandemic have a significant influence on the financial sector, particularly Islamic finance. The COVID-19 epidemic appears to have a significant impact on many facets of market institutions. Due to its integration into the world financial system, Islamic banking is not an exception. The majority of countries implemented travel and movement restrictions. Lockdowns and quarantines are the main causes of the decline in domestic market demand. As a result, many firms have been compelled to cut back on output and employment. This has disrupted the world's supply lines. Significant numbers of individuals have already lost their jobs, and unemployment rates throughout the world are predicted to rise. The epidemic has a particularly negative impact on people and small and medium-sized business (SME). A large number of small and medium-sized firms must pay expenses like installment on their funding from financial institutions while also trying to grow. As a result, the financial industry is now experiencing the upheavals. The Bank Negara Malaysia has responded to the demands of the financial industry quickly. Customers who are affected by the financial repercussions of COVID-19 can access bank material thanks to actions taken by Bank Negara Malaysia. These people who are impacted by the COVID-19 epidemic will benefit from this Bank Negara Malaysia initiative. The COVID-19 began on December 12 in Wuhan City, Hubei Province, China. Within a short period of time, it moved outside Chinese boundaries and impacted more than 163 nations, including Malaysia. 3 Chinese nationals who entered Johor Bahru through Singapore were involved in the country's first COVID-19 case, which Malaysia reported on January 25, 2020. On February 4, 2020, it was revealed that the first Malaysian has tested positive with COVID-19. He is a 41 years old Malaysian man who will be in Singapore from January 16 to January 23 for an international conference including Chinese participants. On February 6, 2020, a Malaysian woman in her 40s who had tested positive for COVID-19 became the first person in Malaysia to get the virus via local transmission. She had no prior exposure to affected regions, although she is the younger sibling of the 41 years old guy whose viral positivity was verified on February 4, 2020. On March 12, 2020, Malaysia announced its first sporadic COVID-19 cases, in which the infected individual had neither visited an afflicted location nor come into touch with another sick person. When a religious mass gathering with 16,000 participants from different nations took place in Sri Petali Mosque in March 2020, the number of COVID-19 cases increased dramatically. As a result, Malaysia was noted as having the highest proportion of COVID-19 positive patients in Southeast Asia. The Ministry of Health (MOH) was important in containing the spread of COVID-19 by disseminating accurate information about the infection to the public through various channels such as MOH websites, social media such as Facebook, crisis preparedness and response centers (CPRC), hotlines, press releases and press conferences by the Director General of Health. This is necessary in order to keep the community informed and to guarantee optimal preparedness to restrict the virus spread. Because of the virus' new features, the COVID-19 scenario has changed often, requiring the MOH to immediately produce collaboration with the National Disaster Management Agency, the MOH has established a temporary hospital in the agro-exploitation Park Sultan, MAIPS, in an effort to address an increase in cases that is anticipated to peak in the middle of April. With 604 beds, laptops, TVs, Wi-Fi and other basic amenities for use by patients and medical personnel, this temporary hospital acts as a quarantine and treatment facility for no restrictions. There are 16 Islamic banks operating in Malaysia that are under the jurisdiction of the Central Bank of Malaysia (BNM), according to a statistic released by the BNM. Malaysia now has 3 locally owned, fully operational Islamic banks, 5 foreign-owned companies, and 8 conventional banks with Islamic subsidiaries. Foreign financial institutions are increasingly choosing Malaysia as their preferred location to conduct Islamic banking operations as a result of the rapid liberalization of the Islamic finance sector and the backing of a friendly business climate. Islamic banking, often known as Sharia law, is a broad term for a banking system that abides by Islamic law. The Islamic banking system, unlike the conventional banking system, is an interest-free institution, and any trade or commercial activity involving interest, riba, gambling, maisir, and speculation gharar are forbidden. Islamic banking is founded on the guiding principles of justice for everyone, mutual risk and profit sharing between parties, and transactions based on company operations or assets. Islamic banking encourages zakat, prohibits monopolies, fosters collaboration for the goods of society, and supports the growth of all halal components of business, in addition to encouraging an equitable profit and loss sharing amongst the parties concerned. Islamic banks, like conventional banks, provide a variety of financial services and goods, but they are required to adhere to Sharia. Islamic banks in Malaysia keep on growing rapidly since their establishment in 1983. Over the past 10 years, the Malaysian Islamic banking industry financing had more than quadrupled, standing at 611 billion ringgit as at the end of December 2019, which is from December 2009. It is 134 billion ringgit and making up 35% of total loans. Thus, the Islamic banking industry is largely expected to attain BNM's Islamic financing target of 40% of total loans by 2020 as per BNM Financial Sector Blueprint 2011 to 2020. Notably, the Malaysian Islamic banking industry has broadened in terms of maturity, breadth, and sophistication over the years. The first effect is moratorium serves benefits for bank loans borrowers. When Malaysia's Prime Minister Tan Sri Muhyiddin Yassin announced this financial relief plan in late March 2020, it became the first nation to enact a 6-month moratorium. As a result, from 1 April 2020 until the end of September 2020, Malaysian banks automatically grant a 6-month suspension on all financial repayments made by individuals and SMEs apart from credit card balance. A borrower is not required to make monthly loan repayments to the banks during this moratorium period. As this program benefits almost 70% of all of the overall funding for Islamic banks, it was anticipated that the suspension would provide them some breathing room. The goal of this project was to maintain money in homes and lessen the burden on individuals who were directly impacted by the pandemic. Along with Malaysia, numerous other nations have enacted different types of moratoria, including Singapore, Indonesia, the Philippines, Thailand, the UK, Canada, Italy, and the US. Many Islamic banks in Malaysia have react to the news of the moratorium by moving proactively to deal with their clients over the moratorium package. To explain the embargo on by an Islamic fixed rate financing program, they began contacting their consumers. This includes giving advice on the particular issues like term adjustments, which can involve altered payments, some due after 6-month moratorium expires, and also the change of tenure. The case in point is the 6 million repayment moratorium that Bank Rakyat, the largest Islamic cooperative bank in Malaysia, has given its client. About 900,000 people are shareholders in the bank, and the B40 household income group accounts for 70% of them. The B40 category in Malaysia reflects the poorest 40% of Malaysians' income earner. Although the Bank Rakyat had to pay a sizable sum in loan repayments, the assistance was required to 8% affected by the COVID-19 epidemic. In addition, Bank Islam Malaysia Berhad (BIMB) data revealed that 95% of its clients chose the 6-month moratorium option. Customers' balance were still paying for their loans throughout this time. According to this scenario, COVID-19 affected a large number of people and business in Malaysia, and they urgently require the moratorium facility. The second effect is special tax treatment on the moratorium interest or profit. The Prime Minister extended the loan moratorium for people who lost their jobs and income due to the epidemic by another 3 months to December 2020 on July 29th. This moratorium extension advanced in the direction of a more focused assistance strategy that will concentrate on clients from the industries that have been severely impacted, such as travel, tourism, and hospitality. However, because loan repayments are a component of this bank's fundamental business, this moratorium facility will have an impact on their liquidity. According to banking specialists, a moratorium normally has a little influence on a bank's profitability, but it could have an effect on their cash flows. The shift in financing arrangement is the reason of this, which might result in a one-time loss for banks. According to estimates made by Finance Minister Tengku Datuk Seri Zafrul Abdul Aziz, the banking industry will lose 6.4 billion during the 6-month embargo from April to September. Financial institutions continue to collect interest revenue even if the borrowers are not required to make payments to the banks during the moratorium period. This accrued interest income will still be taxable. Therefore, the government has granted the special tax treatment on the moratorium interest by taxing the interest on a receipt basis in order to lessen the burden of banks' cash flow. With this tax break, banks are essentially permitted to postpone the taxability of interest revenue from these loans until they have collected it from clients. This unique tax treatment is anticipated to mitigate some of the effects of the general 6-month moratorium and the 3-month extension to selected borrowers. All licensed banks, licensed investment bank, licensed Islamic bank, and prescribed development financial institution (DFI) regulated by Bank Negara Malaysia are eligible for this special tax treatment as the income tax, special treatment for interest on loan, Regulation 2020 were gazetted on August 25, 2020 and will be in effect from the years of assessment 2020 onward. According to the rule, the interest and profit from loans or financings made during the moratorium program under the Prihatin Economic Stimulus Package must not be included in the financial institution's gross revenue for the base period for that year of assessment. Next, the lower overnight policy rate (OPR) affected Islamic banks' performance. One of the ways Bank Negara Malaysia has recently helped speed up the economic recovery following the COVID-19 epidemic is by lowering the overnight policy rate (OPR) by 25 basis points to 1.75% through its Monetary Policy Committee. The ceiling and floor rates were consequently decreased to 2% and 1.5% respectively, but this OPR remained at 1.75% until September 2020. The decrease in OPR has a number of effects on both of the general people and the banks. The local banks would modify their base lending rate (BLR) and base financing rate in response to a reduced OPR by lowering the cost of borrowing money or refinancing an existing loan. This will indirectly alter the interest rate. Therefore, the banks will reduce the borrower's monthly payment or installments by adjusting the interest rate on current variable rate loans. As a result, the new loans will likewise adhere to the present low rates. On the other hand, a lower OPR also means that interest rates will be lower for investments in savings accounts and fixed deposit account. In other words, compared to earlier, the return on the investor's bank investment will be smaller. According to BNM, Malaysia's economic activity have started to rebound and shrank significantly in the second quarters of the year following the economy's slow and progressive reopening beginning in early May 2020 following the MCO. Therefore, the reduction in the OPR provides additional policy stimulus to accelerate the pace of economic recovery due to the COVID-19 pandemic. Table 1 shows the base rate for all the Islamic banks in Malaysia as at 6 August 2020 after the reduction in OPR. Now we move to the initiative plan by the government in developing financial institutions during the pandemic. Firstly, all banks in Malaysia, including Islamic banks, have offered an automatic moratorium on loan repayment for 6 months period starting from April 2020 to September 2020. For banks, this moratorium period is excluded when determining delinquency status. This will reduce the amount of provisioning expenses that would otherwise be required. Our RAM rating 2020 acknowledged that even the temporary leniency is warranted, the reported asset quality indicators would not be reflecting the industry's asset quality. The measures could mask the true extent of delinquencies and defer the crystallization of credit risk to 2021 if borrowers' weaknesses extend beyond the payment holiday. Secondly, although banks will not receive payment by eligible customers during the loan moratorium period, the banks still have to bring the deferred interest to tax. Thus, to be fair to the banks, the government subsequently announced a tax concession for banks on the loan or financing moratorium under special tax treatment. Thirdly, COVID-19 has caused the Central Bank of Malaysia to reduce the BLR, which lead to lower interest rate and affect the country's inflation. The lower interest rate is a problem to the banks as most of the customers will not deposit their money in a bank if the return is low. On the other hand, the lower interest rate will reduce the cost of borrowing and monthly commitment of loan repayments. Besides the extension of the moratorium, the banks also offer to restructure and reschedule the financing repayments, such as revising the monthly commitment and increase the tenure of the loan. The benefit of restructuring is it will give flexibility to the borrowers to pay their commitments within their affordable budget. The pandemic has also affected the bank's business operation. For instance, to be in line with the guidelines of prevention and control of infectious disease issued by the MOH, the banks were only allowed a minimum number of customers at the bank counters during MCO. Furthermore, BNM strongly encouraged the bank's customers to use electronic channels and avoid unnecessary trips to the branch for their own safety and health. Finally, Islamic banks have offered several financial aids to their customers, such as ITECA microfinancing scheme for micro-entrepreneurs and special relief fund for those affected by the loss of their business income due to COVID-19. For the conclusion, they will encounter some problems and difficulties since the propagation of the COVID-19 virus is anticipated to keep upsetting economic activity and adversely affecting the banking and financial sectors. The COVID-19 epidemic is still having a significant impact on the economy, including the banking and financial sectors. Individuals, organizations, and the sector of small and medium-sized enterprises (SMEs) have all been impacted. Initiatives were offered by the Bank Negara Malaysia and banking organizations to assist people, small and medium-sized companies (SMEs) and business in coping with the COVID-19 outbreak's consequences. These efforts give banking institutions the flexibility to swiftly respond to their requirements of their consumers while allowing financial institutions to maintain their emphasis on assisting the economy. Bank Negara Malaysia implemented a bank freeze in response to momentary financial issues. This will benefit private citizens, the small and medium-sized companies, SME sectors, and business that are not required to pay. Before the creditor starts paying a regular monthly payment, there is a waiting period. In doing so, Bank Negara Malaysia has imposed a 6-month embargo on the funding and repayment of personal loans, leaving people who are struggling with that worries.